I don't know anybody that does not want to make money in trading. That's why we do it. But if that's what we focus on during our trading, that's a disaster in the making. And I'm going to cover that in this video. And I know that these are not the topics that really get people hitting the like button. Some even hit the do not like button. You know, these topics are just as important as the ones about strategy. So if you're one of those who look at trading as one-dimensional, the trading strategy itself, you're missing a huge part of the success pie. So hit the like button. It's good for your trading. Anyway, when we think and we talk about trading performance, a habit a lot of traders do, and they get into, especially the new ones, is they start using the dollar value for their P&L. And it's easy to see why, because a new trader, they want to keep their eyes fixed on the small amount of capital that they have. The trouble is that if you approach the market in this manner, it's going to leave you open to all kinds of psychological obstacles. So instead, think of ticks, points, and not dollar amount. So what is a tick in trading? Well, a tick, or a pip if you trade Forex, that's the minimum price increment of a market. And the value that it represents, it depends on the specifications of the product that you're trading and the number of contracts that you're trading. So for example, let's say you trade the Bund and you trade 30 contracts in a trade. Each tick value of a contract is 10 euro. So that means you're going to make or lose 300 euro, which is 30 lots times $10 per trade, for every price your exit price differs from your entry price. Making money and losing money, it hurts. Most people have a strong emotion when they're thinking about making or losing actual money. And this is a problem. And disruptive emotions can be triggered in your trading. So of course, there are the obvious fears of losing money and missing out on opportunities, but there are other ones as well. And for whatever reason, losing money makes us feel stupid. And it feels that we maybe look stupid to other people. And one of the rather less desirable consequences of this, it can be the urge to prove that we are not. And that leads to pretty destructive bouts of fighting the markets. Even worse is when your loved one who doubted your trading from the start, and you take a loss, it's almost like they're saying, hey, I told you so. I told you you're not going to make it. In our society, it's assumed that to some degree, that the level of money that you've made mirrors your success and your value as a person. And yeah, a lot of people are going to argue this point by talking about the sense of fulfillment and purpose being more important. But the simple fact of the matter is I don't recall the trader ever thinking that way. And that's the challenge of trading, but succeeding in this challenge actually means making money. And if you're not careful, you might find that these emotions can do a psychological number with your thoughts as you trade and force you to deviate from your strategy and your trading plan that you've tested and has an edge. So don't think about the dollars that you win and the dollars that you lose. And as simple as this seems, part of the solution to some of the issues that you're facing is to remove your attachment to the money and think in ticks or pips or points, not dollars. Now, of course, I'm not saying you should never look at your trading account statement. That's silly because you need to know how much capital you have in your account and how much margin requirements. But generally, it's better to use ticks for all the other purposes. And this means two things. First off, you need to change your on-screen P&L to display in ticks. Or if you can't do that, then choose to not display anything at all. In all likelihood, the most heightened emotional state you're ever going to experience is going to be in the heat of battle when you're actually trading. So removing the cue for these emotions, the dollars won, dollars lost for these emotions can go a long way towards removing the issue. Look, seeing a few hundred or thousands of dollars lost with each adverse price movement, that can make us all do pretty stupid things. Now, the next thing you have to do is switch all of your performance analysis to be tick-based. Even better, switch to be based on ticks per contract traded. So that means if you make $1,000 on the ES by trading a 20 lot, your relative performance is much worse than making $1,000 trading a 2 lot. 20 lot equals 1 point or 4 ticks per contract versus 2 lot, which is 10 points or 40 ticks per contract. Seriously, just forget about dollars. Now, of course, you're probably thinking, that's a pretty simple calculation to turn ticks into dollar value anyway. And yeah, I agree with that. But the goal is to start to think in terms of how much of a market move you make or you lose and just take away the dollar value. And thinking in terms of ticks, pips, points, and not the actual monetary value that's attached to it, It's something that I've done for as long as I can remember, and I can guarantee you that it's influenced how I react during trades. Maybe it's something you could try to do, see how it works out for you. Please hit the subscribe button, and we'll talk soon.